Hello everyone, welcome to the Ichimoku.co monthly markets review for the month ending Monday, February 29th. Firstly, reviewing the S&P 500 and looking at this candle for this month's trading, we see a very small bodied candle with a larger shadow on the bottom. The shadow size is very similar to the previous month's trading, and it suggests that there's been very strong price rejection from lower levels, and importantly from the area very close to the round number 1800 support. This is an area that has held up as very strong support in the past, and there's a very good likelihood of the market changing trend to the upside off the very strong price rejection from here. It suggests that the sellers have lost commitment in a major way down around that level. Importantly, as I've already mentioned, we have formation of a very small bodied candle, and that's in contrast to the previous month's trading where we had a much larger body to this candle, a black body, and we had fairly strong net momentum to the downside. For this month, the net momentum between the open and the close is insignificant, and it suggests that with the market in a downtrend, with the lack of net momentum, there is a very good opportunity here for the buyers to change the trend to the upside. Also, the market has closed well up above the midpoint level of the range and closed up towards the high, suggesting that the buyers have closed the month in control and setting the market up for a potential change of trend. We also note the potential tweezers bottom pattern. Here we have a downtrend in place, the two lows around the same area, and as always with the Japanese candlestick reversal patterns, they are potential and we do require confirmation of that. So we will be looking for the market to form a higher high and a higher low. So our high here for the month is at 1962.96, and if the market's able to take that out and form a higher high and a higher low, we will have confirmation of that change of trend. Now, this highlighted yellow zone where we've seen the market testing into over the last couple of years and being rejected from there is significant and extends down to around this 1800 round number level, and to the upside, an area that has held as support and resistance in the recent past is around the highs of this candle, and it may provide some strong resistance. Now, even if the market can breach up through there, there is potentially strong resistance around the round number 2000, so we should be watching that area very closely. If we can trade up in a bullish manner through there, there is an opportunity here for the market to trade back up to this major resistance level around the 2100 level. Now, in terms of Ichimoku, we do still have a bullish market in that longer term time frame by trading above the Ichimoku cloud, and importantly the market is still trading around the Kijun-sen indicator. We have just closed below there, suggesting technically we have a negative market in the medium term time frame, but we're so close to it that it's really not that significant, and off the back of the buyers closing with control, there is a suggestion that the market could close back up above that Kijun-sen. In terms of the fast term time frame, price action is maintained down below the Tenkan-sen, and we have seen the Tenkan-sen hold as resistance for this month, and that's very close to the top of that highlighted zone. So the market closing up through there for the next month is going to be very important if we are going to see a change of trend to the upside and a continuation of this much higher time frame uptrend. Now, as previously mentioned, our benchmark on the monthly charts for the formation of major bull, ebb or bear markets is the Kijun-sen indicator, and here we saw previously in 2007 when the market traded down through the Kijun-sen in a moderately bearish manner. The sellers had failed to take control. The market found support around this area just below 1300. We attempted to rally and found resistance around the Tenkan-sen and the Kijun-sen, and the market then sold off in a bearish manner down through that previous support level, and that's how these significant bear markets tend to manifest themselves. Previously in the 2000, the market traded down through that region, attempted to rally into the Kijun-sen and failed to penetrate through there, closing down through the previous support area, suggested that we had establishment of that significant downtrend, and then the market then fell away and completed trading down to around the 770 level. So at the moment we have the market still trading in a significant manner in terms of the Kijun-sen, which is our benchmark here. We are trading around the Kijun-sen, so what we want to see here is the Kijun-sen failing to hold as support if we are going to see establishment of a new primary downtrend in a longer term time frame, a bearish close down through here, and then the market trading in a bearish manner down through these lows, and importantly down through the 1800 round number. And I'd be prepared to call the establishment of a significant primary downtrend in the longer term time frame if we can close in a bearish manner down through there. So some very important trading coming up over the next month, but certainly with the establishment of the buyers taking control of the market for this month, the loss of commitment by the sellers at lower levels, it does suggest that there is very good potential for that scenario not to play out and for the buyers to show some strength and to trade the market to higher levels. Just looking at the Fibonacci extension, and here we're examining the relationship of this current first time frame downtrend that the market's in to the immediate previous first time frame downtrend. And here we have the market trading at parity in terms of Fibonacci, as we saw for the previous month, finding support around the 100% level. And with the stronger rejection from there and the buyers taking control on this candle, it does suggest, in line with the market being rejected from the 100% level, that we are primed for a potential higher high and higher low, bearing in mind that we do have strong resistance overhead. Also examining the Fibonacci retracement, and we have tested down through the 100% level, price rejection for the second consecutive month, with the buyers taking control at the close of this month, suggests strong potential for a change of trend to the upside, but Tenkan-sen resistance is close by and the market will need to trade through there and close through there to confirm. Next, looking at some trend lines, and here previously we saw this very important long-term trend line that was broken about 10 months ago. We then saw bearish trading activity down through there and establishment of an important second time frame downtrend in terms of peaks and troughs, and I'll highlight that for you in a minute. Drawing these trend lines on a log scale is very important, and that's the most significant line there that was broken. The break of the trend line 10 months ago didn't establish a new downtrend immediately. It suggested that the momentum that was in this trend that was described by this trend line had waned, and that there was potential for a change of trend. We have seen establishment of that change of trend for the previous month's trading. Now, with the establishment of a series of lower peaks and lower troughs, and here we have the peak, the trough, the lower peak and the lower trough from the previous month's trading, where it enabled us to draw this downtrend line now, and it has seen the establishment of a new second time frame downtrend, and this suggests that there is potential for the market to trade lower. Importantly, however, what I like to see is when we see the establishment of these downtrends is the market closing down through these troughs, and we haven't seen that yet. And what we've seen for the past 2 months is the strong price rejection from below this trough support. Now, being able to draw this trend line also enabled us to draw a trend channel, and we're able to draw this trend channel once the new second time frame downtrend had been established. That was last month, and for the second consecutive month the market has traded just down through that trend channel and has been rejected from there, and this suggests that there is a very good likelihood of a change of trend back to the upside. But as I have continually mentioned, the strong resistance overhead around the Tenkan-sen indicator, roughly about 1971, is very important, and we would like to see the market close up through there. If we do see the market close up through the Tenkan-sen and the Kijun-sen for the next month's trading, there is a very good opportunity here for the market to trade it back up to the trend line, which will be roughly around that round number 2100. Moving next to our bands, and importantly we saw the bands squeezing up over the last couple of months, suggesting that volatility has become low on the monthly charts in a cyclical manner here through this very strong uptrending price action. Volatility was quite high and we're squeezing, so we're getting ready for establishment of some new trending activity in terms of volatility re-establishing itself and moving higher. Importantly, for the previous month we saw a close down below the bottom band, and that was the first close down below the bottom band in quite a few years, and it was actually since the year 2009, and it suggested that there certainly was potential weakness in this market. As we very often see these new trends establish themselves when we test outside of the bands, and then we rally back and find resistance within the bands. And for this month what we've seen is no weak trading activity. The buyers have closed with control, as already mentioned, but we have seen the bottom band act as resistance, and this does cause some concern. What we'd require here for the next month's trading is to see the market close back within the bands, and we then may not see establishment of strong downtrending activity down through the bottom band. But the market continuing to close down below the bottom band does suggest that there is some negativity in the market, and suggesting that if that upper band lower band trading at roughly around 1965, 1967, if it does continue to hold as resistance and the market closes in a bearish manner down below there for the next month, we certainly could see extension to the second time frame downtrend that was established for the previous month. Just looking to some of our monthly sentiment indicators, and on the first subchart I examined the percentage of stocks that are above the 50 level on the RSI. So we're looking at momentum and those that are moving higher, and the percentage has actually moved higher for this month, moved up above the 70% level. Importantly, as the market had been selling off over the last couple of months, that percentage had maintained itself above the 70% level, suggesting that there certainly was still some sort of underlying strength. And if we look here, previously when we saw that major bear market established, the trend to the downside had really started to motor to the downside once we moved down through that 70% level. So the 70% level here is quite important. Moving higher here for this month suggests that there is a hint that we are seeing some strength return to the market in terms of the buyers. Also, the percentage of stocks in the S&P 500 that are above their various moving averages. And firstly, the 4-month moving average, and that has ticked higher up to about 37%, and coming off a low which was roughly down roughly about the 10 to 20% level, and suggests that we could see something of a short-term recovery. Also, the percentage of stocks that are above their 12-month moving average has ticked higher as well, up to 31%, and the percentage of stocks above the 30-month moving average has moved higher, and it's around the 46% level, and suggesting that we could see quite a strong recovery here. Looking at the percentage of stocks that are above a combined 4-month, 12-month and 30-month moving average, that's ticked higher off a significant low. It's at 20%, roughly 21%, and suggests we may have seen a short-term trough in the markets, and suggesting there is good potential for a change of trend to the upside in the S&P 500. And also with the percentage of stocks that are above their various Ichimoku indicators on the monthly charts, and this is the percentage of stocks in the S&P 500. And the short-term indications here, looking at the percentage of stocks above the Tenkan has improved. It has moved higher, even though we're still getting a bearish indication. It's moved up to roughly about 39%. In the medium-term time frame, percentage above the Kijun-sen has also moved higher. It's at 43%, although still giving a bearish indication. And the percentage of stocks above the Ichimoku cloud on a monthly basis has ticked higher at 42%, and the unfortunately for that previous reading, the percentage of stocks that are below the Ichimoku cloud is actually ticked higher as well, and that's at 34%. So something of a balance between the percentage of stocks above the cloud and the percentage of stocks that are below the cloud, and they're roughly about a third each, and a third of stocks roughly are within the Ichimoku cloud. So just back to our chart here, and as I've mentioned, very important trading coming up over the next month. With the strong price rejection from these lower levels, it suggests that the sellers have lost commitment once again, and with the buyers taking control at the close of this month, it suggests that there is potential for the market to trade higher, but that's only potential. What we have to see is hard, solid evidence of the buyers continuing in this market, and they may do it tough around the top edge of this highlighted zone of previous support and resistance, and with the Tenkan-sen trading around that top edge, that is going to be a very, very important level, as is the area around 1800 if we do see any continued selling in the market.